Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 27th day of February, 2019, and this is the daily report for gold and silver. We do have the precious metals lower across the board with the exception of platinum today. Gold losing about $6.80, and basis, the most active April contract, is currently printing at $1,321.70. Silver losing a full percentage point on the day, about 15 cents, currently trading at $15.68. Palladium really taking it hard, giving up about $25 at $14.9880, so it is back below $1,500, and I find that interesting. And then lastly, platinum up about 1 1/3% at $871 per ounce, and that is all within some mild headwinds from a stronger U.S. dollar back over 96 at 96.04. Traders, absolutely no doubt, today's lower pricing in gold, a decline of about $7, is absolutely confirming that we have entered some sort of a correction, and that correction should turn out to be a shallow or deep correction, but not one that is minute, which is basically what we have been seeing. We've talked about this for a week, and that is the fact that as this market would have a nice price spike, it would trade sideways, come down a little bit, but the difference between this high here and this low here was well under even the 0.23% retracement. It wasn't typically what we would see. We saw it again up here when the market hit 1330 and then just came down a little bit. However, I do believe this time is different. We had a rally that has resulted in a market move of about $150. Considering the fact that we're marking ourselves from about $1,200 up to $1,350. The first mark that makes it an acceptable and relatively decent correction is the 0.23% retracement. That resides at $13.14. We're at $13.21, so just about $7 away from there. Still considered a shallow retracement, but obviously deeper than the 0.23 is a 0.38% retracement. And if that would come to pass, that would take the market to $12.91. My sense is that these are obviously the first two marks that we want to look at. However, because we've not had a really solid correction during this entire rally, you typically will get one deep and one shallow retracement in terms of a 5-wave upside rally. And so we haven't seen either a shallow or a deep correction. So we do want to at least acknowledge the fact that there is a possibility that we'll see that further sell-off, 1273 to 1255. However, my sense is because of the fundamentals driving this market currently, I am still looking for this market to bottom either at 1314 or at 1291. In either case, we are looking at a respectable and defined correction, and that would be our entry point for our next trade. Traders, for right now, we want to remain flat with no active trades, awaiting the proper timing to re-enter the market from the long side. And traders, lastly, I do want to take a look at palladium. As you know, palladium has been on a tear. It is the most precious of all of the precious metals in that complex: gold, silver, platinum, and palladium. We have seen down days as this market has moved up, but we have pretty much seen a rally unscathed between $800 and $1,500 plus. So we're talking about a $700 move, almost a 50%, a doubling in terms of price itself. But here's the thing. Although one day does not mark a correction itself, it can mark the beginning of a correction. And the candle is very interesting because of the length of the tail and the small body size. Technically, we really have to call this a doji. It would be a gravestone or tombow doji, but it's very, very close also to a candlestick type that is simply called a hammer or a hangman, depending on the location that it's found. After an uptrend, that would be defined as a hangman. So the fact is, we hit this record all-time high at 1350. We have began to track lower. And my sense was, when we first started giving our predictions were that this market would run to about 1,500. Of course, yesterday it well exceeded that as it went well above that, almost to 1,550, but it hit our mark. And so here's what I want to say. We do have a strong possibility that we will see a correction enter this market, and after this kind of move, it's almost necessary to kind of release some steam and let it go through its normal trading functions, which is peaks and valleys. And if palladium prices unfold in that way, in other words, enter a correction, the following levels that we want to look at are going to be Fibonacci based, of course. And the first level that we're going to want to look at is a pretty deep correction at 1374. I say deep, it's only the 0.23% retracement, but it's a 0.23% retracement of a tremendous move, a $700 move. So even what we would consider a shallow retracement is a quite sizable move in the market. The next level, of course, would be the 0.38% retracement, and that comes in at 1263. And remember, the one thing that we can say with some absolute certainty is that in the past, when we have seen palladium rise in a parabolic manner, we have also seen it fall in similar fashion. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.